All right, my friends, Dave here, and today we're tackling a tech titan that's been making some serious waves, Oracle, ticker ORCL. This stock has seen some wild swings lately, sparking a fiery debate. Is ORCL a buy, or is this just the calm before another storm? We're diving deep to find out. So, what's the word on the street? What are the headlines screaming about Oracle? Well, after a recent significant dip, think a 20% dive, the market narrative is a bit conflicted. On one hand, you've got the immense hype around AI, and Oracle is signing these colossal cloud contracts, boasting a staggering $455 billion in remaining performance obligations, or RPO. Management, frankly, sounds ecstatic, positioning Oracle as the go-to place for AI workloads. They're painting a picture of explosive future growth. But then, on the flip side, you've got whispers and even some louder shouts about weak cloud profits. The street is looking at the immediate profitability of these massive deals, and let's just say some investors are getting a bit antsy about how quickly that RPO is going to convert into profitable revenue. It's a classic battle between long-term vision and short-term earnings visibility. For anyone new to the game, let's quickly break down Oracle Corporation. This isn't just a database company anymore, folks. Oracle is a global powerhouse offering enterprise IT solutions. Everything from their Fusion Cloud ERP, EPM, SCM, HCM, and NetSuite applications to their crucial infrastructure technologies like the Oracle Database, Java, and their expanding cloud infrastructure with compute, storage, networking, and that game-changing Oracle Autonomous Database. They're selling directly to businesses, governments, educational institutions, and through partners worldwide. They're fundamental to the digital backbone of countless organizations. And their official guidance, especially around those massive RPO numbers, suggests they see a long, profitable road ahead, especially with AI adoption accelerating. Now, this is where the rubber meets the road. How do we reconcile this bullish management talk with the market's weak cloud profit skepticism? We build scenarios. We put some numbers to the narrative and see where ORCL could realistically be headed. First up, our base case. This is our most likely scenario, giving it a 45% probability. Here, we're assuming Oracle successfully converts a significant chunk of that colossal $455 billion RPO into revenue. We acknowledge the market's current concerns about weak cloud profits, so we're not expecting hyper-accelerated profitability right out of the gate. However, the long-term tailwinds from their AI positioning are undeniable. How did we get to a fair value of $349.95? We started with Oracle's current EPS of $4.32, applied the analyst consensus EPS growth rate of 23.11% for the next year, which gets us to a projected EPS of about $5.32. Then, we slapped on Oracle's current PE multiple of 65.8, reflecting the market's high expectations for growth. Multiply those out, and you land right around that $349.95 mark. From a technical perspective, this base case is strongly supported by the fact that ORCL is currently consolidating in what looks like a multi-week bull flag, with critical support holding firm around $284. If that support holds, this pattern playing out towards $350 is a very real possibility, hence our higher probability. Next, let's get a little more optimistic with our bull case, which we're giving a 35% probability. This is where Oracle truly shines. We're talking about them fully capitalizing on their AI leadership and that massive RPO. The weak cloud profits narrative, that fades into the background as efficiency gains kick in, and the sheer scale of those AI contracts translates into rapid, profitable growth. Revenue recognition. Oracle truly becomes the undisputed leader in enterprise AI cloud infrastructure. Management's enthusiastic guidance, fully realized. For our valuation, we again start with that $4.32 current EPS, but this time we're bumping that projected growth rate up to an accelerated 28% for the next year, given the AI boost, landing us at around $5.53 EPS. Then we expand the PE multiple to a robust 75, reflecting high conviction in Oracle's AI dominance. This gives us a juicy fair value of $414.75. Technically, for this bull case to truly ignite, we'd need to see ORCL decisively break above the current resistance at $302. If that happens, the charts suggest a clear path toward $350 and potentially much higher, validating this more optimistic outlook. Now, we can't ignore the downside, so let's talk about the bear case, which we're assigning a 20% probability. In this scenario, those weak cloud profits aren't just a passing concern, they persist or even worsen. Maybe RPO conversion is slower than expected. Cloud competition gets fiercer, leading to pricing wars and compressed margins. Or the costs of building out AI infrastructure prove much higher. A broader tech slowdown could also throw a wrench in the works. To get to our fair value of $237.60, we took that $4.32 current EPS, but we dial back the growth significantly, assuming a more conservative 10% EPS growth for the next year, putting us at $4.75. Then we apply a contracted PE multiple of 50, reflecting diminished growth expectations and ongoing profitability issues. This brings us down to $237.60. Why only 20% probability? Because as we speak, the stock is still holding critical support around $284. The bear case truly kicks in if that $284 support level breaks down. If that happens, the technicals point to supports at $260 and then $230, aligning perfectly with this more pessimistic valuation. So, while it's a possibility, the current chart pattern doesn't make it our primary expectation. All right, let's pull up the chart. Here's what I'm seeing from our technicals team. ORCL has been in a pretty clear multi-week bull flag consolidation. You can see the critical support level for this flag sitting right around $284. On the flip side, the key resistance is at $302. Now, if this bull flag pattern plays out in our favor and the price breaks above that $302 resistance, the next significant resistance level we're looking at is $350. That would be a fantastic move. However, and this is important, if we see a breakdown of price below that critical $284 support, then the next supports, where we might find some buyers stepping in, are at $260 and then $230. So, it's a real pivot point right here for Oracle. So, is ORCL a buy? After crunching all these numbers and dissecting the market chatter, my verdict leans towards a resounding yes, but with conditions. The overwhelming RPO and strategic positioning in AI make a strong long-term case. While the market is rightly concerned about near-term cloud profits, our weighted probability strongly favors the base and bull scenarios, with an 80% combined chance for Oracle to move significantly higher from here. The current consolidation in a bull flag holding key support suggests the market is digesting the news and potentially gearing up for the next leg up. The bottom looks to be forming right now, with a strong probability of upward resolution. Given our analysis, if you're looking to enter or add to your position, consider these levels. The critical support zone around 284 is your immediate point of interest. A confirmed break above the 302 resistance could signal a strong bullish move, aiming for $350 and even up towards our bull case fair value of $414.75. Keep an eye on that $284 level. A bounce there or a solid move past $302 offers compelling entry points. That's all for Oracle today, my friends. If you found this deep dive helpful, you know the drill. Smash that like button, subscribe to the channel if you haven't already, and hit the notification bell so you don't miss our next episode. And I want to hear your thoughts. Drop a comment below. Do you think the bottom is in for ORCL? Let's get the conversation going. All right, before you go buying or selling anything, please remember, I am not a financial advisor. This is for entertainment and educational purposes only. Investing in the stock market involves substantial risk and you could lose money. Always do your own thorough research, consult with a qualified financial professional, and make investment decisions that align with your personal risk tolerance and financial goals. Past performance is not indicative of future results.